Hi everyone, this is Audrey. Thanks for attending my education series all about the home finance questions and answers in 15-minute or less snippets. And today's Lunch and Learn series is going to be about the new Hometown Heroes program here in Florida. So the Hometown Heroes basics are that Governor DeSantis approved this Hometown Heroes program that began June 1st of 2022. This is a down payment and closing cost assistance program from the state, similar to all of their bond and bond alternative products they've had. But this time it is specifically for those hometown heroes. There are over 50 professions such as veterans, teachers, law enforcement, military, paramedics, EMTs, firefighters, those in the health profession, those in law enforcement. Basically, as long as you're certified in one of those areas in the state of Florida, then it's covered. The basics are that it is giving up to 5% towards closing costs and the down payment assistance. You must be Florida State certified and licensed at the time of application. Like I said before, it is for certified members of the Hometown Heroes. You must work full-time at the position. And this assistance is a 0% second mortgage that does have to be paid back. So after the 30 years, it's a second mortgage for 30 years. There are no payments. There is no interest accruing. But at the 30-year mark, or if they refinance, or if you sell your home, or if you're no longer using it as your primary residence, you do have to pay back this 5% up to $25,000 for your closing costs and down payment. There are county-specific income limits and housing limits, but they are higher than the normal bond program limits. So this page gives you the complete list of occupations covered. I will put this link in the YouTube channel, but you can also search on Google, Hometown Heroes list, and this will pop up. And it does give you a pretty detailed idea. It's 7 pages full of everything from, like we said, education, law enforcement, military, massage therapists, athletic trainers, etc. So this is where you would go to find that complete list. So here I put together a pros page and a cons page. Obviously, with every program, there are great aspects and not so great aspects. So starting here on this pros page, there's no intangible or doc stamps. That will save a few $100s for the homeowner. Also, this program generally has set lower interest rates. For example, when I pulled FHA the first week, the program had a lower rate than what was generally offered by the traditional lenders. This does allow for multiple property types. So it does allow for single family homes and townhomes, but also 2 to 4 units, condos, modular homes, and any leftover funds, if there's outside the 5%, they can use that to pay upfront mortgage insurance. It does have lower upfront out-of-pocket expenses. So this program has been created to help those that have full-time employment, but just don't quite have the funds for that down payment and closing costs. It helps to get somebody in a primary home. Conventional VA, USDA, FHA loan types here. It does have a 3% conventional program, the no down payment VA, USDA, and then the low down payment FHA type. There's reduced mortgage insurance offered for those that are at 80% the median income. So that will help save from the monthly payment. And also this program, outside of the normal bond and bond alternative programs that the state has been offering, it does allow for higher income limits per county, and it doesn't require that the entire household income be included. Most of the other products did require everyone that was living in the house, their income had to be included, and in this situation, it's only the applicants that have to be included. So those are some pros that really can help get Hometown Heroes into homes that maybe don't have that 5% already in their savings or for a gift. So some of the cons are not so positive for some people for this Hometown Heroes program are that there are additional program fees. The state does charge a few $100 extra to utilize this program. There are income and loan limits. So on regular loans, you don't have an income limit. So for this program, there is an income limit that's county specific. So you can contact me and I can look up for you or your client what the actual limits are for your county. There is a negative that for a 2 to 4 unit property, so a duplex, the borrower must contribute 3% from their own money or from a gift that they've gotten. So whereas other clients might be able to utilize the full 5% and cover all of their costs, for a duplex or a 2 to 4 unit property, they do have to contribute 3% from their own pocket, their own savings or a gift that they've gotten. The Hometown Heroes does not allow for construction loans. So that could eliminate some buyers that are wanting new construction, because we do offer a one-time close construction, but we would not be able to offer it with the Hometown Heroes program. The program has a first-time homeowner requirement. This doesn't mean that they've never owned a home before. What this actually means is that in the past 3 years, they haven't had any ownership in a primary residence that they lived in. So whether it be a mortgage or something they owned, that the primary residence they lived in over the past 3 years. Veterans in active duty, though, are exempt from that requirement. This program does have a homebuyer education requirement, so the borrowers must take a homebuyer's course that they pay for. And the credit scores are higher for this program. So for the bonds and bond alternatives, they don't go as low as we can go. So we normally can go as low as 580 for FHA and even 550 for FHA in some cases. But with the bond program, the bond alternative, and with this program, they do have higher credit scores. So for Hometown Heroes, it's a 640 minimum credit score and 680 minimum for manufactured housing. So we have to keep that in mind as well. This program is for people that do have decent credit. Also, a negative to some people is that this must be paid back. I've had some clients that have looked into this, and that part, they don't feel comfortable having that second. It is a 0% 30-year second mortgage. They don't have to make payments on it, but it's not forgivable. Other, like the bond alternative is a grant, or they have forgivable loans through the state. This is not that. This program does have to be paid back at some point, whether they sell the house, they refinance the house after 30 years when the loan is up, when the home is no longer used as their primary. So they do have to pay this back. It is not a forgivable loan. Well, I appreciate everyone for attending my Lunch and Learn, my education series that's quick snippets for you to learn under 15 minutes. If you have any questions, please feel free to reach out to me. I would love to answer your questions. I have taken the courses, watched the videos, taken all the notes, and have the access to get you the answers that you might have. And if you want to learn more about any of our programs, you can call me or email me. I put my information right here on the screen for you. It has my email and phone number, which is the best way to get in touch with me. And I hope to see you all at the next education series. Thanks.